Lovely. So, good afternoon or good evening, everybody. Welcome to Microsoft Dynamics 365 Business Central Advanced Inventory Costing. This is going to be a rather advanced, let's say, topic that we're going to cover today. Something that you don't find explained in the official Microsoft Learning content. So today, of course, it helps if you got a background, a bit of finance and accounting background. If you understand inventory management, that will help you. But again, don't worry, because we will have time to go through the details. And after that, after this meeting, we will also have, first of all, we will have a live demo, right? So if you got your sandbox ready, you want to follow along, there will be a few slides, but also a live demo where I will show you. Essentially, we will work together. So if you got your sandbox ready, is going to be a good opportunity for us to work together. So let's get started. Advanced inventory costing. A bit about myself. If you don't know me, my name is Alfredo. I'm a senior Microsoft Dynamics 365 Business Central consultant. I've been working as a solution architect, as a lead solution architect for many years before I started the 365 training. These are some of my credentials. Actually, I need to update the slides because I got 2 more. But again, credentials and certifications are absolutely valuable, but real experience, of course, counts more. So today is going to be about how inventory costs move from inbound to outbound, how to manage direct and indirect inventory costs in Business Central, the difference between these two, and how Business Central calculates and manages these costs, how they post to the general ledger. We will learn about inventory revaluation, because you can revalue inventory in Business Central with a specific and dedicated feature, and how to apply the correct setup. Very important if you are a consultant, but also if you work for an organization that uses Business Central. The correct setup is absolutely critical to ensure that your costs are accurate. So let's get started. How inventory costs move from inbound to outbound. This applies to every software, every enterprise software. We have inventory coming in, it's valued at using a central logic. Inventory gets shipped to customers for customers' orders, but also consumed throughout the manufacturing process, right? And so that essentially it's an outbound. Same inbound concept. If we manufacture inventory, we use assembly, we use manufacturing. The output, production output, is by definition, right, an inbound, because we get inventory, the inventory goes up. And when we ship it, of course, we have outbound. So inbound to outbound in Business Central is very common. You will also find it in warehouse management, but something for another training. So we differentiate between 2 separate cost types in Business Central: expected and actual. And regardless of how you set up your system, Business Central will always calculate expected costs and actual costs. How these costs are posted to the general ledger as a separate conversation that we will look at today. That can vary, of course. So expected costs, like actual costs, are stored in value entries, but they can be stored only in the value entries if we don't enable expected cost posting. So value entries is, think of it as a separate register that sits in between your inventory physical register, ledger, the item ledger entry in Business Central, and the general ledger. That is a sort of in-between translation that ensures that the general ledger inventory costs of sales are always in sync with your physical ledger, which in Business Central, again, is called item ledger entry, also known as inventory subsidiary ledger if you work with other software. Expected costs post to the general ledger if and only if expected cost posting is actually enabled, and we enable it in the inventory setup page. Again, later we will see a demo. So whether you enable expected cost posted to the GL or not, in Business Central, things will not change. The system will always record expected costs. It will be stored, of course, in the value entry and the item ledger entry so that we can run our reports and we can check that our costs are correct. The actual costs, on the other hand, it is always adjusted, and because, again, costs vary. Expected costs can be temporary, right? But also actuals. An example, we purchase goods and then we receive another invoice from a freight forwarder, landed costs, right? Something we'll talk about in a moment. So costs can vary, and so actual costs is always adjusted, and it posts the general ledger automatically. But again, this is an option because Business Central allows you to schedule how actual costs post to a general ledger. And in theory, you can also post inventory costs to the general ledger manually by running a routine that, again, you can schedule. Something that I strongly advised not to do, right? Because the system is perfectly capable of handling hundreds, thousands, tens of thousands of transactions in a relatively short period of time, sometimes tens of thousands of transactions per hour without impacting performance. So it's always a good idea to keep the system in this way. You can see here on this slide here, automatic cost posting means actual costs post to a general ledger automatically, always in real time, and that you leave automatic cost adjustment always on. With this setup, it's virtually impossible to get the inventory out of sync. Your inventory will almost always, I'll say almost always, right, reconcile. There might be exceptions, right? But really, this is the best way to keep your inventory in sync. We also have this concept of inbound to outbound that applies to returns, because in a way, right, if you think about it, when a customer returns stock and we process a sales return, we have an inbound transaction, right, where inventory is received and valued. And once we post a credit memo for a sales return, we actually realize the actual costs of this inbound when the item returned is shipped, sent back to another customer, sold to another customer, sent back to the supplier, or destroyed because maybe it was faulty. We have an outbound, and so inbound to outbound applies to everything. So now that we have this differentiation between inbound to outbound and expected and actual, it's time to further divide those two costs into direct and indirect. Now, most of the time, the most common costs are direct, but Business Central also supports indirect costs. And within the direct category, so to speak, we can also differentiate with the different types of inventory costs, which allow us to manage our supply chain and categorize different costs so that we can track exactly what's driving the cost of our inventory. So let's start with the most obvious of the two. And again, this is not just about a presentation, right? We will go through a live demo in a few minutes, right? So direct costs can be divided into purchase, which is the most common cost type. I purchase an item, I receive it in my warehouse, and that is the cost that I pay for it is the purchase cost, right? But also material costs and labor when I manufacture an item. Those are all direct costs, even though we can further differentiate between material direct and indirect and labor direct and indirect. But we will look at that later. A landed cost is also a type of, it's also direct cost. A landed cost in Business Central is managed through item and charge. Unfortunately, and I say unfortunately because if you or your client, your organization have a rather complex supply chain when they import goods from other countries, landed costs, freight charges, custom clearance, right? Those are often let's say, accrued before we can actually have a final invoice. Unfortunately, Business Central does not support expected cost, which is, in a way, if you think about it, in accounting terms, it's an accrual. Right, there are extensions that allow you to do that, and I know 2 or 3 which are very good, and I almost always use either one or the other, actually 2. But again, I'll let you search and online landed cost extensions for Business Central. You will find 2 or 3 names very familiar. I don't sponsor any of them. I'm not affiliated with them, so I'm not going to. But again, if you ask my opinion, I will tell you which I prefer. So landed costs is a type of direct cost. Now, what's an indirect cost? In Business Central is anything which is indirectly related to the item, but it's applied to the cost of the item. Overhead applied, which does support expected costs in a way which is rather peculiar, I must say. So not the best for your reporting, but there are ways to overcome that limitation. And manufacturing overheads, which are always, of course, accrued through work in progress when we manufacture the item. Manufacturing overhead, work in progress, expected cost of manufacturing, that is a separate conversation because, of course, there is a lot more complexity here. But for that, we have another, we can talk about that another day. That will take probably a couple of hours to look into it. But in general terms, manufacturing overhead and overhead applies are indirect costs, which can be split, of course. You can see the difference between direct and indirect when you post to the general ledger. Again, more in a demo in a moment. So what happens if we make a mistake, if we need to adjust inventory, if an inbound transaction is closed, purchase invoice, but we need to revalue the inventory for whatever reason. Inventory revaluation in Business Central is supported. We don't need to do inventory manual adjustments, something that accountants often need to do. If you work with simple accounting software, you just need to post an entry in your balance sheet, cost of sales, and you fix inventory. Your books are fine, but of course, you don't have the complexity of an ERP. In Business Central, you can use item revaluation journals to revalue your inventory. What is the characteristic of this special kind of journal? It revalues items by transaction, which means a specific inventory purchase receipt or output can be revalued. But, and this is where things get interesting, it can be retroactive, and it's one of the few places in Business Central where you can go back in time. And here you can see in the screenshot an inventory revaluation journal with 2 lines for the same item. One shows September 25 with a quantity of 3, right? You can see here September 3, but we also have March 24, so the year before, and we have 8. Now, the reason why I see 8 here and 3 here is very simple. On the 25th of March 24, I had 8 chairs in my warehouse, right? Then what happened a few weeks, months ago, I ended up with, it's the 27th of September, I only have 3, which means I sold 5, right? So between March and September, I sold 5. Let's say in June 2024, I sold 5. So if I now revalue this entry, I'm going to revalue the 8 shares that I had in March in 2024. So what happened to the 5 that I sold here? They will always also be revalued. So I'm going to revalue my cost of sales across the entire, essentially, chain of events. Remember what I said before, from inbound to outbound. I revalue the inbound, I also value the outbound. So my cost of sales will also be adjusted. And depending on whether this is an evaluation, a positive or negative evaluation, I will either affect positively or negatively the gross margin of that sale, right? That decreases my inventory, those 5 chairs. Very useful, not very consultants and users don't use it very often, but it's very powerful. So item revaluation journals are just inventory cost of sales. When, of course, when it's back in time, it adjusts the actual cost of sales. When it's today, it will just post to inventory adjustment. So quick hack. You can use a general business posting group field on the item revaluation journal, which is hidden by default, but you can actually show it and apply it to the journal, so you can essentially change the cost of sales account. So you can see here, it's the same journal where I use a general business posting group called revaluation. And so general business posting group shows a few columns that allows you to set up the income statement account that you want to use when you use an inventory evaluation. So you can segregate or differentiate essentially what happens to your income statement based on the general business posting group that you use in a journal. Think of it as a reason code, right? That in addition to give you a reason why you are doing the revaluation, it will also choose a specific income statement account based on the reason. So again, inventory evaluation journal, very powerful. So before we get into the demo, let's talk about setup, because setup is arguably the most important thing that we do before we can even start using Business Central. And unfortunately, too many organizations go live with the wrong setup. And this is pretty much what I do now that I do training, right? I teach consultants and users how the system works, and we often find the wrong setup. So just a couple of things, really, because Business Central, unlike finance and operations, is very easy to set up and configure. Very easy. The first thing to consider, allowing negative inventory affects the costing engine. I am not talking here about actual negative inventory. I'm not talking about items that are below 0 in terms of inventory. Just by allowing it, the costing engine will work in a different way. So some of the checks, some of the links between inbound and outbound will simply stop working. And so it's very important, if we allow negative inventory, it would be virtually impossible to get accurate figures. You might think, well, my item is negative 10 pieces, and I sold them because I didn't have time to post that receipt in the system, but I had to generate an invoice because I had to ship the item. The courier was waiting for me. So I just let the inventory go in negative and I shipped the item. And now tomorrow I will get that invoice and eventually the inventory will fix itself, right? Now that is right if we are talking about physical inventory. So the inventory will go below 10, right? Below 0, minus 10. And then you get receipt plus 10. It will go at 0. Physical inventory, right. But inventory costing will not, I'd say might not. Let's say might. I'm going to say will. Might not work, right? And there is actually on the Microsoft Learn website, when if you learn about inventory valuation, there is a small warning that says, well, if you enable inventory, negative inventory, chances are the costing engine might not get accurate figures. It says might not. It's Microsoft's way to tell you, you use it the way you want, right? But don't complain with us if you cannot fix your reconcile your inventory. So better not use a negative inventory at all. Something else, average cost calculations for your inventory valuation still applies when you work with FIFO, last in, first out, of course, average, standard. Better using index because depending on where you check your inventory valuation, you might get different figures. It's a complex system designed to give you certain figures if you look in one place, other figures if you look in another place. Because again, Business Central is inventory management and finance and general ledger and supply chain management. And so numbers might look different depending on how you look. Average cost calculation, better in days, again, something you set up on the inventory setup. So another very important setup and configuration element, enable automatic cost adjustment. Do it because it does not cause significant performance. It might get in the way in terms of performance if you process hundreds of transactions concurrently. But since version 26, Business Central has got a new posting engine that allows you to post multiple transactions at the same time without causing table locking. So do not worry unless your warehouse or your shop floor is processing thousands of small parts per minute. But even that, so do you really need to get your system, and doesn't really matter if your system takes 2 seconds to process a transaction. There are exceptions, but typically accuracy it's better right than speed. So just leave it on, and if users see that the system is too slow, you can always look at options before you disable cost posting. Quick hack, use inventory GL reconciliation, which is a page in Business Central that is not used enough. It is arguably the most important, the most powerful and comprehensive, right, place in Business Central where you can check your items. Now, let's look at a demo, shall we? Let's see how that works with a new item that I just created for this demo. So if you want to follow along, feel free to do it because it's a sandbox. And so we'll show you how it works. So Milan Cherrywood cabinet, 0 quantity on hand. Quick check, inventory setup, I have cost posting. I'm not using posting to the GL because I want to show you what happens. This item has got a 2% indirect cost and it costs $1,000. So let's work out, let's start with a purchase order. And so I'm going to get a new purchase order. I'm going to choose Fabricam and I'm going to receive my item 1000 and I'm going to purchase 10 units and I'm going to pay 1000 and I want it in my main location. There we go, 1000 once again. So what happens to my expected cost now? Let me just receive it and I will end up with expected costs, right? If I check my receipt and I find the entries, I will see my value entry, direct cost, right? Purchase, as I mentioned before. What do I have here? 10,200. 10,200 because the item is valued at 1,000 per piece plus 200 of direct cost applied. So far, so good. What happens to my secret, not really secret, very powerful page that nobody really looks at, inventory GL reconciliation. This is a very powerful tool. There we go. This tells me a lot more than what I want. Inventory accrual interim. Notice that I don't have expected cost posting. This is not about my balance sheet. This is not about the valuation of interim. It's goods received and not invoiced, right? And again, 10,200. The total is here. So far, so good. So what I'm going to do now, I'm going to receive an invoice from Fabricam, and it's going to be an invoice with this number, and I'm going to post it. I'm going to invoice it. I want to open the invoice. What happened now? Let's look at the entries. I also get two value entries. Guess what? Indirect cost and direct cost, exactly what I showed you before, right? Now the system has split overhead applied and purchase cost separate, right? On the value entries on the general ledger entries of my inventory, I have direct and indirect cost going to the same balance sheet account. Okay, and this is finished goods. So let's look at my inventory GL reconciliation. And there we go. You can see how powerful this page is. I couldn't find this page, anything on Microsoft Learn about this page. It's just not mentioned. And it's so powerful. Direct cost applied, overhead applied. It's no longer inventory interim, it's inventory. And so this sits in my balance sheet, right? So very powerful. What happens if we have now another type of direct cost? Let's look at the purchase invoice. I'm going to get a purchase invoice for landed costs, right? Freight. So Worldwide Importers is a freight company. They send me an invoice, right? Oh, not this one, this one. They send me an invoice, and instead of charging me for an item, they charge for freight. And the location is irrelevant, but I use it anyway, and they charge me one pallet, and they charge me $50. What I'm going to do now, I'm going to assign the item charge to a receipt. And I'm going to find a receipt of my Milan cherrywood cabinet. It does have to be the same vendor, right? This is a freight forwarder. I'm going to suggest the item charge, and there we go, $50 are linked to the chairs that I just bought. I'm going to post the invoice, and let's look at the invoice. What happened to the invoice now? So what happened to the invoice? What happens when I look at the invoice? There we go. I see a value entry. This is another direct cost of purchase, right? You can see how we keep going here to the same place, but this time I actually see freight charge, $50 of freight applied to my Milan cherrywood cabinet. So my finished goods now, there we go. I have a debit entry of $50. So my my cabinet now is valued more. Once again, inventory to GL, my favorite page in Business Central when I need to reconcile inventory, right? Overhead applied, direct cost applied, $50 more. And you can see inventory, direct cost applied. If I click on inventory here, I see the receipt expected. I see the indirect cost, the overhead applied, and I see the freight. Everything stored in the value entry. So I never lose track of what happens. And I can keep, of course, adding more to it. Now, last thing, I'm going to get a sales order. And in my sales order, I'm going to sell this item. I'm going to sell it from the main location, and I'll ship one piece at 2,000. So I'm going to ship it. There we go. Item is shipped. What happens to my inventory to GL? Now I have an expected, oops, not this one. I should find an expected cost of sales, right? And if I run it once again, now you can see inventory interim shows as cost of goods sold interim. And this is the cost of sales because it's one piece out of the 10 and it's taking 1,025, right? 1,200 as direct cost plus indirect cost, right? Overhead applied. And the 5 from the landed cost. But again, it's an interim, right? So now I've got a difference, right? Because my cost of sales is just expected. It's expected until I invoice it. Oops, I need a tax group because this is a US localization. So let me update a tax group, non-taxable. I'm going to release and I'm going to post it again. I'm going to post it again. I'm going to post it, try again. I don't want to open it because now what I want to do, I want to see inventory to GL reconciliation. And what do you think I should find? Cost of sales. And now inventory minus cost of sales. This is the total inventory value in my balance sheet for that item. And that's how the system keeps everything under control. So we can take it to the next level by using manufacturing, assembly, now inventory evaluation, and so on. different currencies, but you get the point. You can see how such a complex subject can actually be so simple, right? So once and if, of course, we treat it, we explaining in a certain way, right? So the live demo is finished now. Before we close, I want to tell you, and we are 5 minutes, unfortunately late, but again, if you stay with me for another couple of minutes, this is what I have for you. Advanced inventory costing in Microsoft Dynamics Business Central. I have a class. If you coming up next week, if you want to attend it. This is a class for users and consultants working with Microsoft Dynamics Business Central. We will essentially go over what we discussed today, but it will be in depth, and it's going to be essentially we're going to look at the more advanced scenarios that requires like 4-hour sessions. So 4 hours interactive live session on Microsoft Teams, and you will get class recording. You will get a PDF manual, Advanced Inventory Costing in Business Central. You will get a cheat sheet Excel template to do the calculation in a certain way to understand better what happens in Business Central. You can use it for your organization or for your clients. And after that, you get a 1-hour one-to-one consulting call with me. Essentially, if you need to reconcile your inventory after the class and you want to work with me, I will work with you, and we will reconcile your inventory. The class is limited to 20 attendees, 4 hours, advanced. We want to keep it live. We want to keep it interactive. It cannot be more than 20 employees, and it's 465 British pounds, about $500. We start on March the 5th, pretty much at the same not at the same time, at a different time, 2:30 p.m. UTC. Which is about 9:30 Eastern time, I believe, right? So I will share the link in the chat here if you want to book it, and if that, I'm going to keep the class open for until the day before, only to the again to those who sign up for the meeting. So we will work together pretty much like what we're doing now, but it's going to be 4 hours, and so we can work together in your sandbox and your production environment. And again, it's a way to take your knowledge, your understanding of inventory costing, even if you don't have a finance and or an accounting background like me. I learned finance and accounting years ago, but my background is in supply chain management. So I hope you find it beneficial. I know I recognize some of the names here. I worked in the past with some of you, which is always nice to see that. I know some of you some of you will definitely be able to take what you learned today and start doing some like self-learning using your sandbox, right? But if you're happy to work with me, if we need an extra extra help, let's book the class, and next week we will work together and we work through T accounting. We will learn all the intricacy about overheads applied in different currencies, for example, and we will touch on assembly, we will management, we will see inventory costs applied to multiple locations, because when you ship an item from one location to another, there is some complexity here that we want to learn. So I'll leave it to you. Before we close, is there any question? Let's open the Q&A session. If you want any question, if you have a question for me, we can spend a few minutes here. I'm conscious we run over time. Unfortunately, it's a complex subject, and so I ended up spending too much time probably in the intro. Any question about any specific application? Any challenge you have at the moment at work? Maybe you're a consultant, you work with a client and you have something difficult. You're facing a challenge, or maybe again you having some issues at work. Maybe you are struggling to reconcile your inventory. Anything about landed cost, for example, which I have a class with a US company tomorrow, and we were going to cover landed cost tomorrow. I have 1 hour session for a company in North Carolina. And we're going to look at landed costs, freight costs, custom duties. By the way, Business Central new version will have an excise management module. Excise management is not really landed costs, but it's related. So duties, excise duties like alcohol, tobacco, for example, it's going to be live in the next version. Very exciting. International companies that trade inventory do need that, right? Okay, I see no questions here. So thank you, everybody. We can close it here. Very great to see some familiar names here online. It's great to see some ex-colleagues or current clients, actually customers working with me. It's always been a pleasure. Thank you very much. Any question, please send me an email, and you always know how to find me. Once thank you very much, sir. I appreciate that. Again, you can find me online on LinkedIn. You have my email. Just send me an email, and anything, you know where to find me. Okay. No problem at all. You're all very welcome. Thank you very much. Excellent. Thank you all. Have a great rest of the day. I'll talk to you all very soon. Thank you, everybody.